Hey everyone, and welcome back to Motivation Library. I'm really excited about today's deep dive.
Me too.
We're going to be taking a close look at The Psychology of Money by Morgan Housel.
Oh.
Now this book, it's not your typical personal finance guide.
No, not at all.
It's less about the numbers and more about, well, the psychology.
Yeah, the psychology of money, how our minds work when it comes to money, the emotions, the biases, the stories we tell ourselves. It's fascinating stuff.
Right. And Housel argues that understanding this psychology is actually crucial for achieving true financial success. So we'll be diving deep into some of the key insights from the book. And to kick things off, one of the first things that struck me was Housel's take on luck and risk.
Oh, yeah, that's a big one. He tells these contrasting stories about Ronald Read, a janitor who became a millionaire.
Right.
And Richard Fuscone, this Harvard MBA who ended up going bankrupt.
And those stories are just mind-blowing. I mean, they really challenge the idea that financial success is all about intelligence or education.
Yeah, you'd think with a Harvard MBA, you'd be set for life, right?
Yeah.
But Fuscone made some really high-risk bets that didn't pan out. While Read was incredibly frugal, invested consistently over decades.
He was playing the long game.
Exactly. And it just highlights that, even with all the knowledge in the world, your decisions and behaviors are what ultimately determine your financial outcomes.
It's so true. And I think that's a really important takeaway for anyone listening.
Yeah. Ask
We
Trent.
often think we're being rational with our money decisions.
Yeah.
But so much is influenced by our past experiences, especially those early encounters we had with money,
Yeah.
growing up.
Oh, absolutely. And Housel actually cites research on this. He talks about how investors' risk tolerance is often more influenced by the economic conditions they experienced in their formative years than by anything else. Like someone who lived through the Great Depression, they
Right.
might be way more risk averse than someone who came of age during like a tech boom,
Yeah,
even if they have the same level of, financial education.
that's such a good point. And I think it really highlights the importance of self-awareness, right?
Yeah, definitely.
Yeah.
We need to be aware of our own baggage
Yeah.
when it comes to money. And speaking of shaping our thinking, another powerful idea from the book is the concept of enough. Housel tells this great anecdote about John Bogle, the founder of Vanguard.
Oh, yeah, I love that story.
He was at this billionaire's party, and he asked the author Joseph Heller why Heller wasn't more driven to accumulate wealth. Like, why wasn't he trying to be a billionaire too?
Yeah, like their host.
Exactly. And Heller's response was classic. He said, I have something he will never have enough.
Wow. Such a simple statement, but so profound, right?
I know. In a world that's constantly telling us we need more, it's a powerful reminder to think about what truly brings lasting satisfaction.
Exactly. When is it enough? And how do we avoid falling into that trap of always wanting more?
Right, because that desire for more can actually lead to some pretty destructive financial decisions. Housel contrasts this idea of enough with the story of Rajat Gupta, who was this incredibly successful businessman. He had achieved incredible wealth and status, but he got caught up in insider trading and ended up losing everything.
It's a cautionary tale for sure.
Yeah.
It seems like he could never reach that point of contentment.
Like he always needed more. And it ultimately led to his downfall. So recognizing enough is not just about feeling content. It's also a safeguard against those risky behaviors driven by greed or the fear of missing out.
Right. And that brings us to another key takeaway from the book, the power of compounding.
Oh, yes. Compounding Housel has this brilliant analogy where he compares it to the formation of ice ages.
I love that analogy.
It's such a great way to explain it. He says, just like tiny changes in the Earth's tilt over millennia can lead to these massive ice sheets, small, consistent investments over time can generate incredible wealth.
It's not about finding the next hot stock or winning the lottery.
No.
It's about playing the long game.
Exactly. Starting early, staying consistent, even if it's with small amounts, and letting compounding work its magic over decades.
And he uses some great real-world examples to illustrate this, right?
Oh, yeah. Like Warren Buffett.
Right, Warren Buffett.
Whose incredible wealth is largely attributed to his early start in investing and the power of compounding over 70 years?
That's amazing.
It is. And he contrasts Buffett with someone like Jim Simons, who's actually achieved even higher annual returns.
Right.
But for a much shorter period. So despite Simon's success, Buffett's early start and decades of consistent compounding have given him this unparalleled advantage. Time is truly an investor's greatest ally.
It's about playing the long game and letting time work in your favor. And that leads us to another crucial concept Housel explores, the importance of embracing failure.
Ooh, that's a good one. No one likes to talk about failure.
Right, but it's inevitable.
It is. And Housel uses the stories of Heinz Berger and the art dealer and Walt Disney's early struggles to emphasize this point.
He's saying setbacks and failures are part of the journey, even for the most successful people.
Exactly. What sets them apart is their ability to learn from those experiences and keep moving forward.
What I found really interesting was his discussion of tail events.
Oh, yeah. Those unpredictable events that can have a huge impact.
Right, like in venture capital or the stock market, where a tiny percentage of companies drive the vast majority of returns.
He uses the example of the Russell 3000 index.
Yeah.
It's a powerful illustration of how a few wins can outweigh many losses.
It's about being persistent and willing to adapt even when things don't go as planned.
Absolutely. Think of it like a baseball player. They strike out way more often than they hit a home run, but those few home runs make all the difference.
Love that analogy. Okay, so now let's shift gears a bit and explore the role of narrative. Housel uses this fascinating thought experiment where he asks us to imagine an alien observing Earth during the 2008 financial crisis.
Oh, I love that part.
The alien notices that the physical economy, businesses, the infrastructure, all of that remained largely unchanged. But what shifted dramatically was the narrative.
The story we told ourselves about it went from one of confidence to one of fear and uncertainty.
Exactly. And that shift in narrative, even though it wasn't based on any real change in the economy, had a devastating impact on the real world.
It's amazing how powerful our beliefs and stories are. It's like a self-fulfilling prophecy. If we believe the economy is going to tank, we act in ways that make it more likely to happen.
It's like we create our own reality.
We do, in a way. And this leads to Housel's discussion of financial pessimism, which he notes can be very seductive. It often feels smarter to be cynical to predict the next crash.
Yeah, it's like you get to say, I told you so, when things go wrong.
Right. But Housel makes a compelling case for optimism. He argues that from a historical perspective, it's actually the more rational stance.
He reminds us that humanity has made incredible progress, despite facing all sorts of setbacks and challenges. And this progress often happens gradually.
Yeah, it's easy to miss when you're focused on the day-to-day.
But when you look at the bigger picture, it's undeniable.
Like watching a child grow. You might not notice the changes every day, but over time, the growth is obvious.
That's a great analogy. And it makes you wonder if maybe we're too focused on the negative.
Yeah, we tend to overestimate the likelihood of bad things happening, especially when it comes to money.
It's tied to our survival instincts, right?
Exactly. We're wired to avoid losses and protect ourselves. So we naturally pay more attention to potential risks than potential rewards.
Makes sense.
Yeah.
But if we're constantly fixating on the negative, we might miss out on opportunities.
We might also underestimate our capacity for resilience and innovation. We humans are pretty good at solving problems when we put our minds to it.
That's true. Okay, so speaking of the future, Housel dedicates a whole chapter to exploring what it really means to be wealthy. And his definition is pretty different from what we usually see portrayed in the media.
Oh, yeah, for sure. He argues that wealth isn't about flaunting your possessions. It's about having the financial freedom to live a life that aligns with your values and goals.
It's about having control over your time, your choices, your destiny.
Exactly. And that kind of freedom often comes from a high savings rate and a commitment to frugality. It's not about being cheap. It's about being intentional with your money.
And recognizing that happiness doesn't come from accumulating more stuff, but from experiences, relationships, and having a sense of purpose.
That's it. It's about aligning your spending with what truly matters to you.
I love that. And finally, Housel emphasizes that there's no one-size-fits-all approach to personal finance.
Nope. Just like there's no one-size-fits-all approach to life.
We all have different values, risk tolerances, goals.
What works for one person might not work for another. So it's crucial to be honest with yourself about what you want out of life and to create a financial plan that reflects that.
It's about being intentional with your money, viewing it as a tool to help you achieve your goals rather than as an end in itself.
Right. And it's about recognizing that financial success isn't just about the numbers. It's about living a life that is both prosperous and fulfilling.
Finding that sweet spot between financial security and a life rich in meaning and purpose.
Absolutely.
Well, I think that's a great place to wrap up this first part of our deep dive into the psychology of money.
We've just scratched the surface.
We've covered a lot of ground. But there's so much more to explore.
Stay tuned for part 2, where we'll dig even deeper into the psychology of money and how it impacts our decisions.
Okay.
Welcome back to Motivation Library. Picking up where we left off in the psychology of money, one of the things that really resonated with me was Housel's concept of paying the price. He argues that everything in life has a price tag, and investment returns are no exception.
That's intriguing. It's like there's no such thing as a free lunch, right?
Exactly. He uses this analogy of buying a car. Say you want a fancy sports car, you got to be prepared to pay a hefty price for it.
Okay, I see where you're going with this.
Same goes for investing. You crave those high returns. Well, there's a price for that too, and it's called volatility.
So those ups and downs, the roller coaster ride of the market, that's just the cost of admission for potentially higher returns.
Precisely. It's not a bug, it's a feature. Housel argues that investors who try to avoid this volatility, constantly jumping in and out of the market or chasing the hottest stock tip, they often end up paying a much higher price in the long run.
They're so focused on dodging those dips that they might miss out on the big gains that come from riding out the storm. Kind of like trying to time the waves at the beach. You're more likely to get knocked down than to catch a good ride.
That's a perfect analogy. And Housel gives this example of GE under Jack Welch. Welch was obsessed with delivering consistent earnings growth, even if it meant using some, let's say, creative accounting to smooth out those numbers.
It's like slapping a Band-Aid on a broken bone. You might feel better for a moment, but the underlying problem's still there, festering.
And that's exactly what happened with GE. Eventually, the company faced a reckoning, and shareholders paid a steep price for those years of manipulated earnings.
A powerful reminder that there are no shortcuts to success, and trying to game the system often backfires.
No shortcuts indeed. You have to be willing to ride out the volatility, to weather those storms, if you want to potentially reap the rewards down the line.
Speaking of weathering storms, Housel also dives into the psychology of bubbles. He argues that while they're often portrayed as driven by pure irrational exuberance, there's often a more nuanced explanation.
He makes a great point. He says many investors who participate in bubbles, especially in those later stages, have very short time horizons. They're not necessarily buying into some grand illusion about the future.
So they know it's not sustainable,
But they're trying to ride that wave of momentum for as long as they can. It's a speculative game.
kind of like flipping houses during a real estate boom. You know it can't last forever.
Yeah.
But you're hoping to make a quick buck before the bubble bursts.
Exactly. And Housel argues that this kind of short-term thinking is fueled by the ever-increasing speed of information and the rise of technologies that enable rapid trading.
The financial world's moving at warp speed, and it's tempting to trade and keep up by making those quick bets rather than taking a long-term perspective.
It's easy to get caught up in the hype, especially when you see others making those quick profits. But it's important to remember that not all bubbles are created equal.
And that understanding the underlying dynamics is crucial for making sound investment decisions.
Absolutely. Now let's talk about something that's often seen as the opposite of hype pessimism. Housel notes that, especially in the financial world, pessimism often holds a certain intellectual allure.
It's almost like a badge of honor to be cynical, to predict the next market crash. It feels smarter somehow than being optimistic.
You got it. It's like those people who constantly predict doom and gloom, and then when something bad actually happens, they get to say, I told you so. But Housel acknowledges that there are valid reasons for pessimism, especially given all the economic and geopolitical challenges we face.
Right. It's not like we're living in a utopia.
But he also makes this really compelling case for optimism, arguing that it's a more reasonable stance from a historical perspective. He points out that despite facing countless setbacks and challenges throughout history, humanity has achieved incredible progress.
We've overcome wars, famines, pandemics.
And yet, we keep innovating and finding solutions to complex problems. This progress is often driven by this fundamental human desire to make things better, to create a better future.
But progress can be slow, can't it? It can be hard to see amidst the chaos of daily life.
Exactly. It often happens gradually, so it's easy to miss if you're not paying attention. It's like one of those optical illusions where you don't see the bigger picture until you step back and look at it from a different angle.
And we tend to focus on the dramatic, those negative events that grab our attention.
Exactly. Those market crashes, those political scandals, they overshadow the slow, steady progress that's happening in the background.
Makes sense. So maybe pessimism is seductive because it focuses on the immediate, the visible, while optimism requires a broader perspective, a longer time horizon.
That's a great way to put it. And Housel argues that this tendency to fixate on the negative is often amplified in the financial world because money is so deeply intertwined with our sense of security and well-being.
Yeah, any threat to our financial stability can feel like a threat to our very survival.
Right. So it's natural to focus on potential risks rather than potential rewards. But the key is to find that balance, to be cautious without letting fear paralyze us. We don't want to miss out on opportunities because we're too afraid to take a calculated risk.
It's about finding that sweet spot between prudence and optimism.
Exactly. And this leads us to another important point Housel makes, the power of narrative. He argues that the stories we tell ourselves about the economy, about financial markets, they have a profound impact on our decisions and ultimately on economic outcomes.
You mentioned the alien observing the 2008 financial crisis earlier. That was such a powerful illustration of how a shift in narrative, even if the underlying fundamentals haven't really changed, can have a real-world impact.
Totally. It highlights how our collective beliefs and stories can shape economic reality. If everyone believes the economy is going to tank, they'll stop spending and investing, which can actually cause a downturn.
It's like we create a self-fulfilling prophecy.
We do, in a way. So we need to be aware of the narratives that are shaping our thinking, especially those driven by fear or speculation rather than facts and evidence.
We need to think for ourselves, do our own research, and make decisions based on a realistic assessment of the situation.
Absolutely. Don't just blindly follow the crowd or the loudest voices in the room.
Now let's talk about something a little more personal, what it truly means to be wealthy. Housel dedicates a whole chapter to this, and his definition is quite different from what we often see in the media or pop culture.
He argues that true wealth isn't about having a mansion full of fancy cars and designer clothes. It's about having the financial freedom to live a life that aligns with your values and goals.
It's about having control over your time, your choices, being able to pursue your passions, spend time with loved ones, contribute to causes you care about without being constantly stressed about money.
You got it. And that kind of freedom often comes from a high savings rate and a commitment to frugality, not necessarily a massive income.
It's not about being cheap. It's about being mindful and intentional with your money.
Exactly. It's about recognizing that happiness doesn't come from accumulating more stuff, but from experiences, relationships, and having a sense of purpose. And that leads us to Housel's final chapter, where he talks about finding what works for you.
He emphasizes that there's no one-size-fits-all approach to personal finance, just like there's no one-size-fits-all approach to life.
We all have different values, different risk tolerances, different goals. What works for one person might be a disaster for another. So it's crucial to be honest with yourself about what you want out of life and to create a financial plan that reflects that.
It's about being intentional with your money, viewing it as a tool to help you achieve your goals, not just as an end in itself.
Right. And it's about recognizing that financial success isn't just about the numbers. It's about living a life that is both prosperous and fulfilling.
It's about finding that sweet spot between financial security and a life rich in meaning and purpose. Now, before we wrap up this part of our deep dive, I want to touch on one more thing that really resonated with me, Housel's discussion of saving and frugality.
He makes a really compelling argument for why saving is so important, not just for financial security, but for that sense of freedom and peace of mind it brings.
It's about having that safety net, that cushion to fall back on so you can take risks and pursue your dreams without the constant fear of financial ruin.
Exactly. And it ties back to that idea of enough that we discussed earlier. Saving isn't about hoarding money. It's about creating a sense of security that allows you to live a more fulfilling life.
It's about making conscious choices that align with your long-term goals and recognizing that you don't need to keep up with the Joneses to be happy.
So true. And that's a great point to leave our listeners with as we head into the final part of our deep dive. We've explored the cost of investing, the power of narrative, the importance of finding what works for you.
And in part 3, we'll zoom out even further, looking at how societal and economic forces have shaped our views on money and what it means to build a healthy and fulfilling relationship with money in today's complex world.
Welcome back to Motivation Library for the final part of our deep dive into the psychology of money. We've explored a lot about individual psychology and money, but in this last part, we're going to zoom out a bit.
Look at the bigger picture.
Exactly how those larger societal and economic forces have influenced the way we think about money.
It's really fascinating how those external factors play a role.
Absolutely. And one of the things Housel does so well in the book is he kind of connects those individual behaviors to those larger economic trends. He actually traces the evolution of the American consumer from post-World War II to present day.
Oh, it's such a fascinating journey through history. You really start to understand why we think about money the way we do today.
So walk me through this evolution a bit.
Yeah.
What were some of the key turning points along the way? Well, it all starts with this period of incredible economic growth after World War II. You had the 1950s and 60s. The returning GIs, they had this pent-up demand.
Right.
New access to credit. They went on a buying spree, basically, which really propelled the economy to new heights. It was this time of shared prosperity. The gains were more evenly distributed. And the American dream, it felt attainable for a lot of people.
It sounds like a time of abundance and possibility.
Yeah.
But how did things start to change from there?
Yeah, well, things started to shift in the 1970s. We saw rising inflation, those oil shocks, a lot of economic uncertainty. And this period, it really laid the groundwork for the issues we're seeing today, like rising income inequality and that growing reliance on debt.
So even though the economy continued to grow overall, the benefits weren't being shared as widely anymore.
Yeah, unfortunately not. The gains were increasingly concentrated at the top, which led to this widening gap between the haves and the have-nots. And, that created a lot of frustration for people who felt like they were being left behind.
Like the rules of the game had changed, but not everyone was told.
Exactly. And then to add fuel to the fire, we entered this era of keeping up with the Joneses on steroids.
Oh, yeah, with the rise of mass media and social media.
Exactly. People became so much more aware of how others were living, what they were buying, what they were doing. And it fueled this intense pressure to maintain a certain lifestyle, even if it meant going into debt.
It's like everyone's trying to project this image of success, even if it's not their reality.
And it's exhausting. And of course, this all culminated in the 2008 financial crisis.
Right. So even though we've technically recovered from the crisis, a lot of those underlying problems still remain.
Yeah, that's the thing. High levels of debt, stagnant wages for many, this feeling of economic insecurity that persists. And Housel argues that this feeling, it's really contributed to a lot of the political and social unrest we've seen in recent years.
Yeah, because people are looking for answers, right? They want someone to blame. They want to feel like they have some control over their lives again.
Exactly. And it's understandable. But, it's important to remember that there are no quick fixes here. Real change takes time, it takes effort, and it takes a willingness to work together to find solutions.
That's a good point. It's a reminder of how interconnected everything is.
Yeah.
Our financial systems, our social systems, our beliefs about money, it all plays a role.
It really does. And it underscores how important it is to have those open and honest conversations about the challenges we face and what we can do to create a better future.
Absolutely. And that brings us back to, I think, one of the core messages of the psychology of money.
It's not just about the numbers.
It's about living a life that's fulfilling and meaningful.
Using money as a tool to support those goals.
Right. Recognizing that money is not inherently good or bad. It's just a tool. It's up to us to decide how we want to use it.
To make a positive impact on the world around us.
Exactly. It's about aligning our financial decisions with our values and being mindful of the ripple effects of our choices.
And that requires us to be more thoughtful, more intentional, to be aware of our own biases, and to be mindful of the impact we're having on others.
So The Psychology of Money, it's a book that really encourages us to think differently about our relationship with money.
To understand the psychological factors that are driving our decisions.
And to ultimately use money as a tool to create a life that is both prosperous and fulfilling.
And on that note, we highly recommend checking out the book for yourself. There's so much more to unpack and explore.
Yeah, you'll learn a lot about yourself and about the world around you. So that wraps up our deep dive into The Psychology of Money by Morgan Housel. We hope you've enjoyed this 3-part series.
And as always, thanks for listening, and be sure to join us next time for another deep dive here at Motivation Library.